What is the investment opportunity that everyone is missing?
I think outside of AI, of course, Ozempic has been huge, but I think we'll go do your research on cancer treatments that are extending life and life quality by 10 to 15 years. I think that is going to be the next wave over the next maybe 6 to 7 years. Like the weight loss drug and Ozempic in that era has completely taken over. But I think decreasing morbidity rates and quality of life increases while a patient has cancer. Not that I can't say everything that I've been told, but I've been hearing there's some alternative treatments that are coming from mainstream healthcare companies that are not as damaging as chemo or any of the traditional remedies that are coming. So if you can have cancer, go into remission, have high quality of life, don't lose your hair, don't lose all of your healthy antibodies, I think that will set the stock market on fire over the next 4 or 5 years.
Yeah. Isn't that like kind of synopsis of how we look at the market now? Like everybody talks about the tech companies. I think most people couldn't name 10 healthcare companies
at all.
This is the biggest business in the country.
Absolutely. It is the business. Tech may get the most funding, but especially in the down market, pharma and healthcare are really the ones to go to. If you want to have a true edge in the market, and they're like the one thing that Kramer has said historically that has been true, there's a bull market somewhere. In the down market, pharma and healthcare tend to do better. In a zero inflation environment, tech will do better. So you have to know what cycle we're in. Interest rates are up, healthcare is up. Ozempic is going crazy. We talked about Novo a lot. I've been screaming Eli Lilly forever, knowing that the interest rates were going to come up. That was a play into the rise in interest rates as well. So you have to know the seasonality and the macro picture of what to invest in as well.
Okay.
Yeah.
So off the backs of that, what sectors are best to invest in a down market?
Healthcare, for sure. I love. Third, I would probably look at oil, and then B, I would look at commodities. So I would go healthcare first. Well, no. Let me scratch that. I would go defense. I don't love all defense companies, but in a down market, and if we're going to enter a longer war cycle, which we've been in war forever as a country, I would go healthcare, defense first, or defense second for sure. Those are the three that I would go with. Yeah, so I would take out commodities and pair them with defense.
So historically, this is based on history, obviously. In a down market, utilities, healthcare, and consumer staples are the safest and probably the best investments. This is historically based on the data. Consumer staples make sense. All right, these are the things that we're always going to need: beverages, food, home care supplies, personal supplies. These things we're always going to need, whether it's a bull market or a bear market. Those are necessities.
And we'll get to Coke versus Pepsi later.
Yeah. I was going to say, so
yeah.
We talk about it all the time, and we talk about ETF. So XLP would be, if you don't know what consumer staples are, that would be a good ETF to look at, and just look at the holdings and look at the allocations based on those holdings. So if you're looking at it from an individual standpoint, you can see the companies, or if you want to have a safe route and invest in an ETF, you can see that they have there, what they have there. Consumer discretionary would be something like we always talk about when we talk about XLY. But again, those are things that we kind of spend when we have more than
extra money,
right? This is like when we have discretionary income, these are the type of things we spend on. So you'll find Amazon. So it's kind of the inverse, right? When money starts to slow down, then we go back to the necessities. Again, food and beverage, personal items. So healthcare you spoke about, but utilities is something as well.
Yeah.
Again, these are necessities, right? We're going to need power. We got all these things that become necessities in life, or the way is how we should be looking at it from an investment standpoint. What do we absolutely need? Do we need communication? Do we need utilities? Do we need yes. So if we're looking at necessities, we're looking at need. When it's a recessionary time, this is where our focus kind of should be.
The only thing I would say about utilities is you have to know when to get out, because if we're back in a low interest rate environment, you could miss out on an opportunity to get 500 to 1,000% gain on the tech side. So I agree, but it's more of if I had a secondary portfolio, I would follow that. But if we got back to 0 to 3% interest rate, I would have to take profit in the utilities and consumer discretionary, and then go back to, like, if we want to talk rotation, That is a macro rotation that hedge funds do use, not like the quarter to quarter that is often talked
I think
about. That doesn't make.
I think we agree. Healthcare is number one. We both agree.
Yeah,
with that.
absolutely.
But you said oil. I'm interested in why you said oil.
Usually because if oil goes up higher, our economy tends to go down. During war, USO tends to shoot up a lot more. Crude and WTI goes up a lot more. So it's not one that I've always loved. But if I'm looking historically at what does shoot up, oil does go up in that commodity space when the market is down overall. Like if we go to $115 a barrel, which I'm not saying we will, but that will be a sign of suppression in the economy overall. Like VIX is always number one for me, but if I have to pick second, like seeing where the price of oil is a determining factor of where the economy is as well.
Yeah, I remember during the pandemic, it was negative. Remember how
it went negative?
That was crazy.
Well, speaking of oil, so do you think oil will plummet or will continue to go higher in this current economy that we're in?
I think oil will pull back a little bit. Maybe high 80s, and then we'll start to shoot back up. So we're in a very interesting space because we're not clear on what's going to happen with Hamas. We'll talk about Kaiser Permanente in a few. They're going on strike. UAW is still in proceedings. The Hollywood strike just ended. So, and Troy said it, like when it was negative, people began to build positions in oil. I think the highest it got to maybe was $91 about a year and a half later. So we're going to be a place where it's choppy back and forth for a little bit. Ultimately, like oil prices are going to come down because if not, consumers are going to get crushed and businesses are going to get crushed. But I think we'll see prices come down, then shoot back up, and then ultimately go back down in about 3 or 4 months.
Yeah, you know what's interesting, and maybe you could again just break this down for the people who may be unfamiliar. The correlation between the oil prices and when we see conflicts or war. And so over the weekend, we saw oil go up by 4%. Yeah. And so we saw this happen when Ukraine and when Russia invaded Ukraine. It was a conflict. We saw oil prices have volatility. So what's the correlation between oil and conflict and war?
Because we don't control our oil supply as cleanly as we should, because we're dependent on others. So now, of course, I think Saudi Arabia said that they may release barrels to offset the prices so it doesn't hurt everyone during this time, because you don't want a whole bunch of reasons to not invest or for people to be timid. And we probably have 10 of them right now. We don't need another 5 on top of it. But the correlation is like because we don't control our supply and other countries have a vested interest in it, oil prices can continue to go higher during times of conflict because of people are going to keep the reserves usually to themselves. Ultimately, how this always plays out with oil, everyone's worried for 2 or 3 months and it goes down. That would be the same case here. There's also why it's a push for it to go towards EV, so we can have a control of that market cap, even though if we talk about EV isn't as clean as everyone thinks it is. And most of the people in oil will have majority market share in the EV space. But because we don't control our own supply, that's why you will see a lot of price manipulation with oil during times of conflict.
Yeah, conflict, natural disasters. We've seen that before.
Yeah,
it's seasonality. So all these things play a role in when we're talking about oil. So yeah, it's interesting to keep an eye on.